Hello, everyone. Welcome back to the Ever Forward Mindset YouTube channel. I'm Michael Rebello. I am the host of the Ever Forward Mindset podcast and the president of Ever Forward Capital Partners. So glad you could be here today. Today, we're talking about something I'm particularly excited about. How do you invest passively? So let's dive into this topic. I know the last time I talked, it was about what is multifamily real estate, but now I'm going to tell you how you can actually get into real estate on the passive side. So let's dive in. So, what is passive investing anyway? So, it's pretty much summed up into this quick quote, which is build wealth without the hassle of property management. So, I'll give you an example. So, you have a lot of big players out there that will either buy a duplex, triplex, or a quadplex, and sometimes they'll be the property manager on site. So, you'll have somebody that rents out the unit and they rents out the other three if it's a quadplex. So you basically on-site property management. With some smaller properties under commercial, so if you have like 5, 6, or 7 units, you might need to be on site or to have someone on site. So you're not really passive, you're more on the active side. So this is kind of like a generic quote. I don't particularly like it, but it really should say build wealth without being the property management. So basically it's laissez-faire, if I said that right. I know it's a French term, but basically you're hands off. You're more passive, where you just fuel and feed money into the investment or into the investment property, and you start to develop some cash flow and some passive income through the property. But anyway, let's move on. It's investing in real estate without actively managing properties, which is true. So you don't have to worry about the property management. You don't have to worry about being the asset manager. You don't have to worry about raising the capital. You don't have to worry about underwriting or acquiring the deal. You can just passively invest into the deal. So I think that's pretty cool, especially if you don't have the time to be looking for deals or to be actively operating as a real estate entrepreneur, but you really want to put your money somewhere that you feel like it's a tangible asset, or you just want to make income for your family, your friends, your brother, your sister, your son, your daughter, whoever. Maybe you want to build a financial freedom or a financial legacy. This is how you can do it. At least it's an avenue. Next, you can earn cash flow, appreciation, which I talked about in the last video. These two, cash flow and appreciation, and tax benefits while someone else handles operations. I'll give you an example. Let's say you're the passive investor and I'm the operator. I make sure that you get your funds and your returns back towards you, and maybe more, hopefully definitely more. But I'll actively manage the property. So we'll look at the underwriting. We'll talk with asset managers. We'll talk with property managers. We'll talk with insurance and mortgage brokers. We'll basically develop a team and manage the property throughout always to have a good team. But we'll use our team and our relationships to make sure that this property actually goes through and you get the returns that you deserve and that you're looking for, and hopefully more. Not guaranteed, but that's basically how we do it. But anyways, next, before I do continue, there are tax benefits to this. So you can have like tax write-offs and whatever. I'm not too educated on the tax side yet. I'm not a tax, financial, or legal advisor, I will admit. But we'll dive into deeper topics such as cash flow appreciation, tax benefits, eventually down the line. But this is just, what is passive investing. And then lastly, it's ideal for busy professionals, high earners, and those looking for truly passive income. So for those that don't have the time to formulate a good team, to look for the deal, to operate on the deal, and they have the capital that they want to put to work, but they don't want to be active. They don't have the time to be active, or they just don't want the hassle. That is where passive investing comes in handy. That passive invest into a property, to an acquisition, you name it. So it's really good for those that don't have the time, but want to have their money make more money for them. So why passively invest anyway? I know I listed some reasons previously in the last slide, but let's dive in. So it's steady income, earn rental cash flow without daily management. So you won't have to worry about the management at all, especially if you're passive, but I do recommend you do this. Stay in contact with the team that's managing the property. A good investor is an investor that's actually educated and known to the team. So I'll give you an example. For an investor that's, really hands off, like they just put their money down and they don't contact, you really want to contact at least either quarterly or every month and say, hey, How's my money doing? How's the property doing? How's the team doing? At least ask these questions. Write down some questions or concerns you may have. Stay on top of trends like news trends or local trends, and see what, any concerns that you might bring up, and bring it up with the team. This is a team sport. And sure, if you want to be passive, that's fine. But it's always okay to ask. The answer is always no until you ask. So remember just to keep yourself educated, keep yourself informed. So, but yeah, that's pretty much it. So you won't have to worry about daily management. And then the steady income, yes and no. I wouldn't say it's completely steady. You're going to have your fluctuations depending on the market. Distributions may be delayed or early, so it's not perfect. But if you're really just looking for just straight rental cash flow, you're going to get it every month or at least quarterly, depending on how the distributions and the team and the property is set up. Then yes, you're going to get steady income, but it's not all the time. Let me say that. Not all the time. Not every deal, not every property is perfect. Not every market is perfect. So do your due diligence and talk with the team. Next, no tenant headaches. Avoid late night repair calls. So there's an operator that I know quite well who was managing, a duplex, a triplex, and a quadplex, and they would get phone calls in the middle of the night saying like, my toilet has a leak, or my faucet has a leak, or my window's broken. Now what? Right? You have to get up, put your clothes back on. Now your sleep is ruined, and then you actually have to go and do it. Nobody wants that hassle. So we will have on-site property management and maintenance teams and an asset manager to handle that for us, so that we as operators don't have to worry about those maintenance repairs. We'll delegate, we'll set up a team, and we'll send out, jobs to go and take care of that. But otherwise, if you're on the passive side as a limited partner, for example, you won't have to worry about that. So that hassle, you won't have to worry for. So, which is really good. I don't want that headache, and neither do you. Next, we have wealth building. Grow your net worth over time. I will state this again and again, pretty much in every video. This is not a get rich quick scheme. Anybody that tells you that you can get rich quick off of real estate, that's a lie. There's a lot of work, a lot of time, a lot of energy that goes into this. But if you find a good team and a good property and do your due diligence over time, maybe 2, 3, 4, 5, 6, 7 years on the upper scale for net worth, and you can scale and grow your portfolio and help your family. So that's something that's cool. And then lastly, time freedom. Invest without sacrificing your schedule. So a lot of us operators and investors, we do suffer with time. We're in this business early, or at least now, to figure out a solution of where we can get our time back. We can't buy back time, but we can do things and implement things in order to save time, to delegate, and not only that, to get to our investment goals quicker. So if you have the investment goal of just passively investing, you can do that. Maybe you don't have time. Maybe you want to save time for your family, for your W-2, or maybe even some personal projects that you have. And if you want to invest passively, this might be for you. So definitely some time freedom in there. So let's discuss some strategies. So you have real estate syndications, which is basically a group of investments in large properties. So we'll have a team of investors and a team that we manage properties. So you have a team of LPs and you have a team of GPs. An LP is a limited partner and a GP is a general partner. General partner is the one that basically works the deal. So we'll pool our investments together. We'll work with a bank. We'll work with a mortgage lender. We'll work with insurance, and basically all the people that make the property tick. And we'll acquire this property and we'll hold it for 3 to 7 years, depending on the business plan. So basically pool our resources together, get a property, and happily ever after, I guess you could say. So I'm more familiar with the real estate syndication side. Here are some other examples. You have, real estate investment trusts, buy shares of professionally managed real estate portfolios. You can do that. If you want to be much more diversified, if you want to diversify your portfolio and spread your risk, especially if you're involved with risk management, and if you know your risk management, of course, you can spread that across multiple properties. So you can structure things differently. You also have your crowdfunding platforms, which you can invest in real estate deals online with lower capital. So you can do that, where it's basically this big fund that people can just throw their money in and it's invested across properties, if I understand correctly. I don't know. I'm not quite sure, but I know there's quite a bit of SEC regulations that go into that. And then you have like turnkey rentals, private lending, but these are all pretty much examples and ways that you can get into real estate, especially the high-end real estate, on the passive side for saving time and all that, just for passive wealth. But I'm more familiar with the real estate syndication side because I like working with people and I just like, building a team and just going hands on with property. But that's just me. Next, how do real estate syndications work? So this is one I'm most familiar with. So I'm going to teach you a little bit about it. This is not a deep dive of real estate syndications, but at least it's a glimpse to get you an idea of how these work. So we have our limited partners, which would be you if you want to be a passive investor, which is known as your LP. So basically, it's a passive investor who provides the capital. So depending on how the deal is structured or what the deal requires, we may have an investment requirement of either 25,000, 30, 35, 40, maybe even 100,000 if need be. But that is how we do it, where we just bring passive investors, either accredited or not accredited, depending if it's a 506B or C under SEC regulations, and we go forth from there. So that is basically passive right there. Limited partner. That's it. That's your passive route. It's just to be a limited partner in the deal. I know there's quite a few people that have learned quite a bit from being a passive investor or an LP about real estate syndications just by being on the passive end and just watching what happens. So it's really cool. And it's a great way to get your education in hands-on pretty much. Not hands-on for the management, but hands-on with at least capital and into a deal. So it's cool. Next, you have your general partners, which handles the property management, financing, and strategy. That would be me. That would be me, my team, with Ever4 Capital Partners, and those that I'm affiliated with and associated with will come in and we'll manage that property. We'll take care of it. We'll run the numbers. We'll develop a business plan. We'll execute that and then maybe exit in 3 to 7 years, depending on the plan. So we will work the property, we'll work the plan, and we'll make sure that you get the returns that you are looking for and that you deserve. And then lastly, we have cash flow and depreciation. LPs earn passive income and profits at the sale, which is awesome. So not only are you getting passive income through rental income or maybe some fees or whatnots, but you also have, appreciation at the end. So some investors look for more on the appreciation side, which is very much delayed gratification, where they're waiting for 3 to 7 years for that lump sum, or they prefer more the passive, steady income stream of like cash flow. Maybe they're not looking for appreciation. Maybe some investors are looking for both, but that is a specific niche of a property that you want to look for. So identify what your goals are. But regardless of the fact, when you have profits at the end of the sale, that's where that appreciation comes in handy. So let's say you acquire a property in, the year 2000. Now let's say you bought it for $5 million, and now it's 2025, and now let's say that property is worth $10 million. But now with the value added and we forced depreciation, like I said in the last video, we could potentially raise that value to maybe even 20 million. So take 20 million subtracted by 5, that's 15 million. That's 15 million spread across the GPs and the LPs as well. So that is fantastic. That's a great return. Now, mind you, that's pretty much holding the property for 25 years. But this at least gives you an example of what appreciation and forced depreciation can do in the long run. So that's that profit at the end of the sale or refinancing if you want to get out. Multiple strategies there. So how do you even start passive investing? That's what I'm going to talk about now. So educate yourself. Educate. Always be learning. Always be a student. I promise you it'll help. Learn about syndications, real estate investment trusts, and crowdfunding. Know your options, know your risk, and educate yourself across multiple things so you know what you're getting into. I mean, a lot of successful negotiators, business people, politicians, and world leaders, they know, or the strategy that they have, they know who's at the other side of the table. They know who they're facing up against. So when you're educated and when you're well aware of what you're getting into, you have a better ground for yourself to ask questions, to negotiate, and express your concerns. So it's a lot better. Next, define your goals. Are your goals cash flow? Are you saving on taxes? Are you looking for more of appreciation? So what are your goals? What are your investment goals? I know I had a goals video previously. So what are your goals? One, for the long run? Is it for your family? Is it for you? Is it for a new house, a new car? Is it for your grandchildren, your current children, your great-great-grandchildren? What are your goals? What are your goals now, later, and much, much later? And not only that, what are your financial goals? Is it cash flow, appreciation, and tax saving? So look for those, identify those, and then use them to fuel your passive investing journey. Next, research investment options. Find trusted syndicators or real estate investment trusts. I'm going to express this. Find trusted syndicators or real estate investment trusts. Research investment options. I know I said it backwards, but trust. Trust is that key word right there. You want to do your due diligence not on the property, but also the team. You want to have a good team. And I'm going to explain to you why. A good team can turn a good deal into a great deal. A bad team can turn a good deal into a bad deal. Do you follow? Okay. Now that's why I say that, because if you have a good team, a solid team that can work together and execute on point, then that good deal will be turned into a great deal, and our investors will be happy along with our general partners. And not only that, it looks good for anybody that wants to get into the business with us. So make sure you have a good team that you're working with, or you know that you're going to be investing with, and make sure that the property is also good as well. You don't want foreclosure. You don't want to be lied to. You want honesty, transparency, and consistency. So look for that. Understand your team. Understand who's on the other side of the table. And then go forward if you feel comfortable. Sure. If you don't feel comfortable, go back to research. Research your options. There's plenty of options out there. Next, analyze returns and risks. Review deal structures and past performance. So what's the past performance of the team? What's the past performance of the deal? What's the past performance of the market? Look at those things. Understand what you're getting into so you can be a well-educated investor. So we like to call those sophisticated investors. You're sophisticated in the business. You're not going in blindly. You at least have an idea of what's going to happen or what may come down the line. And then lastly, invest and enjoy passive income. That's it. So just sit back, relax, enjoy the ride, and we'll take it from here. That's pretty much it. So here are the benefits of passive real estate investing. So this is basically summed up into the top tier benefits of it, which is diversification, tax benefits, and scalability. So you can invest in different property types and locations. So let's say you have $100,000 to invest. Maybe you don't want to tie it up in one property. Maybe you want to diversify it across multiple properties. Diversification is key. So look for that. Maybe diversification isn't your goals. Use that to your advantage to go forward with your investment journey. Next, tax benefits. Enjoy depreciation and deductions. We're going to go into this later about tax benefits in a later video, because this is where this is a huge, I guess you say, turn on for investors and those looking to get out of just being taxed like crazy, like out of California or Massachusetts. Taxes are high. You got people that don't want to do taxes anymore. They want something where, they're taxed little, but they're also making income. So that's a huge sale. And lastly, grow your investments without extra work. That is the beauty of scaling. So if you want to find investments that scale, do multifamily real estate, because you can scale that business really well. Now, lastly, is this meant for you? I know in the goals video in the beginning, is it really meant for you? Do you want to, be honest with yourself? Does this align with your goals? Does this align with your risk management? Does it align with your future strategy? Does it align with who you are as a person? So, but anyway, let's talk about this more on the financial side. So do you want cash flow without active management? Yes or no? Do you want to be an LP or a GP? Ask yourself that. Do you have capital but lack time for hands-on investing? Maybe you do want to be a part of that, but that's where, you can do like a joint venture where you're more active. Everybody's active. But maybe you don't have time, but you want to put your money somewhere into investment, like real estate. That's where passive investing comes in handy. So maybe that's in your goals, maybe it's not. So figure that out. And then lastly, are you looking for diversification and long-term wealth? Again, long-term wealth. This is not a get-rich-quick scheme. So what are you looking for? Are you looking to diversify your portfolio? Are you looking for a legacy asset, which will basically, hold between 10 or more years? Or are you looking for cash flow? Understand your goals and where you stand. And then lastly, here's a summary and overview. Want to invest in real estate but don't want the hassle of tenants, toilets, and turnover? Passive real estate investing allows you to build wealth, earn cash flow, and get tax benefits without managing properties yourself. That's the beauty of passive investing. You're hands off, you can sit back and enjoy, but also make sure, look for a good team and look for good property. But anyways, that's enough of me. So hopefully this video helped to teach you a little bit of what passive investing is and what we do. And yeah, good luck on your investment journey. Thank you so much for watching. Hope to see you next week. Build yourself better and bigger every day. Live better, live bigger, and go make it out there. Take care.